The coronavirus has sickened the UK economy, and growth figures show the path to recovery will be all but painless. A lockdown imposed in late March has pushed the world's fifth largest economy into its biggest quarterly recession since the global financial crisis. The British economy shrank 2% in the first 3 months of the year, with a record contraction of nearly 6% in March. Around 2.5 million people have applied for unemployment benefits since the lockdown began. And it may not get any better this year. The Bank of England last week warned the country is facing its worst recession in 300 years, with a predicted contraction of 14%.
We're facing severe impact from the coronavirus. You're seeing that in the numbers, and that's why we've taken the unprecedented action that we have to support people's jobs, their incomes, livelihoods at this time, and support businesses so we can get through this period of severe disruption and emerge stronger on the other side.
The government has given tax holidays to businesses, boosted welfare payments, and this week extended a jobs retention plan. The scheme pays 80% of the wages of more than 7 million furloughed workers and will now run until the end of October. But few think it will prevent a big rise in unemployment.
It may be that the organisation I work for has to go through a series of branch closures. So yes, I do have concerns about the business dropping off a cliff once the furloughing stops.
On Wednesday, the UK started easing lockdown measures, hoping to accelerate an economic rebound. Those who cannot work from home have been encouraged to return to the office, but have been advised to avoid public transport. People are now allowed to exercise and meet up with others outdoors as long as they stick to social distancing rules. The relaxing of measures may give Britons the feeling of a return to normality. But to economists, the government's extension of support programs is a clear sign it expects the crisis to continue for months. Sibel Karkus, TRT World.
Well, for more on this, Vicky Pryce joins us now from London. She's an economist and board member at the Centre for Economics and Business Research. Welcome back to the program, Vicky. So first, the UK had Brexit uncertainty. Now it has the coronavirus. The economy there really has suffered quite a lot recently, hasn't it?
Oh, absolutely. And you've seen the figures that have come out. They show that March was pretty bad. The interesting thing is that people had hoped that maybe the first quarter, because we started the lockdown so late, wouldn't be so bad, but actually it has been. We've had one of the worst figures probably we've ever seen for the month of March itself. And remember, the lockdown only really started on the 23rd of March, and yet things had already started slowing down. There had been self-isolation and distancing suggestions beforehand, before the proper lockdown. We had pretty bad floods in February, so that wasn't going very well. And you had on top of that, since you mentioned it, the Brexit uncertainty, in the sense of needing to know, and businesses were not terribly certain, what would happen by the end of the transition period, which was December 2020. So you put all that together. We had, of course, a decisive victory in December for Boris Johnson and the Conservative government. And people thought things would start improving, but actually they didn't, particularly. So we were already on a slowdown. And then, of course, this hit. The interesting thing, if you compare the UK with other countries, we're likely to see a much sharper fall in the second quarter, which is where we are in now. And probably for the year as a whole, it will be the worst in the EU.
Yes, I do want to ask you about what we can expect next, because these latest figures come shortly after the Bank of England governor warned of the worst recession in around 300 years for the UK. So do you expect that to actually materialise? Will that become a reality?
What we've seen so far is that output is about 30% of where it was on average over the last year. So yes, there's already a decline. People have had to stay at home. In many other countries, the same thing, of course. They haven't been spending, they haven't been producing. There are still loads of people, of course, at work. I mean, remember, 8.6 million, I think, frontline workers are still there. So at the National Health Service, doing IT support, delivery drivers, postmen, pharmaceutical companies, of course, are still doing well. Supermarkets are operating. Nevertheless, so many people have either stopped working or are now being supported by the government, or have been made unemployed, which really means that, with stores being shut and very little manufacturing activity, it's surprising, actually, that the economy is still operating at some level. So, yeah, I think 20 to 30% decline this quarter is quite likely. Now, of course, we have to watch it because people are now, as you showed, allowed to go out a bit more, but also encouraged to go to work if they can't work from home. And that is beginning to be reflected in transport data, figures going up, and some manufacturing starting again. Car production that fell by 95% last month by comparison to a year earlier is beginning to take place again. So it remains to be seen whether this quarter is as bad as people are forecasting, but it will be pretty bad.
Yes. Now, given the dismal growth figures and that grim outlook from the Bank of England, it's no wonder that the government is keen to get the economy back on track. But we know there's been a lot of confusion in terms of the advice the government has been giving. Do we have any more clarity about just exactly how Britons should be getting back to work?
There is now the publication of guidelines that at least give a little bit more certainty to businesses as to what they're expected to do. Obviously, workers will not want to go back if they're not sure that the health situation will be okay for them. So what is happening now is that for particular sectors, we've seen a lot more of what's expected. For bigger firms, they have to do a risk assessment. So nobody will go back to work if that risk assessment isn't done and understood and actually published for the larger organizations. So there is a lot of guidance that has come through since the original statement by Boris Johnson on Sunday, which was a bit confusing, but now there is a little bit more clarity. Now, how exactly it will operate in practice is the thing that nobody knows. And there are transport workers still worried about their own safety when they're operating the tubes and the trains. Yeah. So there is a serious issue still there to be sorted out.
Okay, Vicky Pryce in London, thank you for your analysis as always.